I heard
Would
that.
have to remind you, Jason.
Yep, beat you to it. Hey, Don, welcome. We'll just give it about another minute or so. Some users start flowing in. Let's see here. Share my screen.
See it.
Great. Okay. Thank you all for being here. We will jump in. Today will mostly be Q&A. We'll kind of just let it go maybe 30, 45 minutes, depending on how many questions there are. But I'm going to start off by just doing a very quick follow up on the trade that we've been kind of tracking, this earnings diagonal. The time that the strategy would be to close it tomorrow, but I just wanted to show if you didn't want to try to close the front month, or you didn't want to take the risk of a weird last minute move in the stock where you'd end up having to exercise your short option, or where it would be exercised against you. Just another alternative approach to closing out, especially if you have wide markets. Just kind of a nice way to lock in a profit without having to close a position by using stock to hedge and get that delta neutral. Quick disclaimers. This is not a solicitation to buy or sell any security ever. This is not advice. You should read the characteristics and risks of standardized options. The results here are provided for general information purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investment in light of your financial condition. Okay, you know me, Jason Hitchings, the CTO, and yeah, been in the options business for about 18 years now and known Ophir a long time. Okay, so just in case anyone missed the last session, just a real quick recap. We went to the Today tab. We looked at some trades that we ended up not using, and then we ended up doing the Sherwin-Williams diagonal trade. We moved the end date up to the current date, which was the 11th. We checked the technical conditions to make sure they were true. We checked that the earnings was verified and that we could buy options. We could sell some calls on one side of the earnings event and buy some calls on the other side. We placed a trade inside of Thinkorswim. This is the desktop application. We ended up doing this, buying the 300 for the back month and selling the 310, the out of the money in the front month, because that was as close as we could get to what the strategy was asking for. We got filled. We did a little bit better than on the bid and on the ask. We did kind of closer to midpoint. There's a little slider down there that lets you control some of that. And once we got filled, yeah, so now we're just kind of tracking it over the last few days. And I, in the last session, walked through, how that position changed over the last few days and how much of that is because of the delta, the stock movement, and how much was because of the passage of time, the theta. And I mentioned that the plan is to sell when the front month options expire. We had these expire Jan 19th, so that if you wanted to follow the strategy completely, you would wait to close everything out tomorrow evening, which is what I would normally do, but we have this session and I wanted to kind of show another approach. So rather than closing it out, I tried a different approach. So I have this little alert set for me tomorrow. So I will close out my long position tomorrow. Okay, so we had these two strikes. One was a 9 delta, one was a 49 delta. So we had to get this kind of net delta position. The delta kind of told us, as the stock moved, how much money we would expect to make or lose as it goes up and down, and the gamma told us how much that would change over time. So today was the 18th, and this is how the position looked today. Stock is at 302, so it moved up a few dollars since that last time. You can see that we've lost a little bit of money on the short leg, and we've made some more on the long one. Not a lot, though. Actually, that was just in the last day. Since the open, we're pretty much, it's ended up right around the price we got filled at. I got filled at around 35 cents. And it's still back at 35 cents. So that's great for that short one, since the long one it has made a little bit of money. So we could try to just close out this position. Let's say that, this was the situation with the market. Tomorrow is, 20 cents bid, 45 cent ask. So those are relatively wide. But we could just say, hey, that's fine. We want to close the position. Maybe it's the data expiration. Maybe it's, instead of stock being at 302, maybe it's at 308, 309, and you don't want to take a chance in the last 15 minutes of the market that it's going to end up 10 cents in the money and someone's going to exercise, and you're going to have to deal with being stuck with 500 shares of Sherwin-Williams, or being short, that many shares. So yeah, we could just try to, close that out on the ask, which would cost us $225. We could put, we could put in our trade price at closer to 35 cents and try to buy to close this position closer to mid-market. I think based off of what we've seen so far, we'd have a decent chance of being able to get that, but it's still going to cost us $175 to close those options. And that seems like quite a bit, considering that stock's at 302, as of when I did this earlier today. When, it's only 2 days left for these 310 calls, so do you want to spend the $175 to exit the position, or would you rather wait through expiration? So we know right now that essentially that when we look at our total, position of deltas in this stock, we can see that we're net long about 232 deltas. We're short 50 some odd deltas on our short call, and we're long about 290 on the long call, and that ends up being around 232. So if stock goes up $1, we stand to make about $232 right now, and if it goes down $1, we stand to lose about $232. And so we could just wait and let that play out and let these options lose value and see what happens. But if you said, hey, that's a pretty good return, I think I, invested 4,000, I'm up about 25%. I don't really want to spend another $175 to close this thing out right now, but I just want to lock in the profits, or some of the profits that I have right now. There is another choice. So now that we know that we're long 232 deltas, we can at least hedge the risk. Now we kind of look at it as risk, in a sense, if we have profits that we're trying to lock in, of the stock moving up or down in a way that we don't like. Obviously, up is good for us, down's bad for us. But if we're just like, hey, we just want the $1,200 and we don't want to spend $175 to close this thing out, there is another choice. It's not perfect, but it's a good tool. And that would be, since stock is moving up $1, we lose 232, and down $1, 232. What we can essentially do is short that number of shares of stock. So if we're long 232 deltas, if we short 232 shares of stock, then the next $1 of movement as stock moves up, we're going to make $232 in our option positions, and we're going to lose $232 in our stock position, but we're going to end up kind of even. And especially with stock commissions generally being close to zero at this point, it's kind of nice because you can place that stock trade and it doesn't cost you much, to do it. Maybe a teeny bit of margin, interest for a day or two or something like that, but it's not a lot. Same if the stock moved down, then you'd make the money in the stock and you'd kind of protect yourself from loss in your option positions. So let's just kind of go ahead and do it and see what it does. We see our total deltas here are 232. So I click sell, I enter 232 shares to balance out my deltas. I end up moving this thing closer to the midpoint of the bid and ask. This was by stock standards, it's still tight, but it was 20 cents wide. So I just got it a little closer to the bid and ask. I clicked review, I click send, and it actually was working here for maybe 60 seconds or something, but I got filled at that price. And then I ended up, when you look at my delta position, you can see I'm now short 232 deltas in stock, and I'm long roughly 232 deltas in my options, and my overall delta position is pretty close to zero. Now, that doesn't mean if the stock goes up, $5, $10, $20 that everything's all balanced out. It's really a hedge against short-term stock movement, but there's a lot of other things that can affect the price of options, good or bad. Volatility can increase, time is passing. There are definitely other factors. But for right now, I've definitely decreased the volatility in this position. It's going to definitely stay much closer to this, kind of amount of profit I have locked in right now. So you'd think, if you're a little bit newer to the concepts of delta and gamma, you'd think like, okay, great. We are short about a little bit less than one delta. It's like being short one share. So if the stock goes up $5, then we're only going to lose $4 or $5. Doesn't quite work that way, because how many deltas are in this position change pretty rapidly. So this thing's at 310, but as stock goes up, this is going to get closer to 50 delta very quickly. This is going to go a little deeper in the money. The deltas are going to increase in this, but they're not going to increase in your longer term 300 call as fast as they're going to increase in something that's expiring in 2 days. And I'm going to kind of walk through that in a little bit more detail. So what the gamma here is telling you is that you're short 15, meaning that the next, as the stock goes up $1, your deltas in this position are going to get more negative by 15. So this is quickly going to approach 50 deltas. So this is your gammas for the entire position. But your deltas in this position, if you divide out by 5, this is about 11 delta right now. But this is going to quickly approach 50 delta as you start going up, because we know by the time we get to 310, if stock goes up $8, this will be at 50 delta, which would mean your total short deltas in this position would be 250. So we'll kind of walk through it a little bit more slowly. But the idea here is that when you own out of the money options that are very close to expiring, even if you're looking at delta and trying to be neutral with respect to stock movement, things change very quickly when you own these way out of the money options. And that's part of the reason I wanted to do this today, is to kind of walk through this example. It's a little bit more of an advanced topic, but we've had some questions on it, so I wanted to dive in a little bit on it. So if stock's at 302.35 right now, then as stock goes up another $1, our overall delta position is going to decrease by 7. So right now we're pretty delta neutral, so we're going to be about negative 7, 8 deltas if this goes up $1. So right now we're kind of, right now at this current price, then we've kind of have no more P&L base, no change in our P&L. As stock goes up, that next $1, this isn't exact, but the next $1 is basically pretty well hedged. As the stock keeps going up, then these deltas are going to be moving against us. So it's going to feel like we're getting shorter and shorter and shorter in our positions, because the short 310 call is getting more and more likely to actually end up in the money. So the deltas are increasing in that pretty quick. So what you see is that every time the stock goes up by $1, the deltas are increasing pretty rapidly. I just assume that the gamma is going to stay more or less the same. gamma can change over time. I mean, change as price changes too. But if it stayed roughly the same, and it's going to get you pretty close to 50 delta by the time you're at 310, so it's not too far off. So your overall deltas in this position are going to be increasing pretty rapidly, and you're going to be getting more and more, kind of net short in your position. So you can actually start to lose a little money if this thing starts to move, and that's if it moves, a few dollars. But just as like a theoretical, we can look at what happens on a bigger move, and so the opposite is also true. And this is approximate for conceptual purposes. It's not exact by any stretch, but as the stock goes down, you're going to end up longer. And so that you're essentially, you're already, well, you're net short and you're getting shorter. So your position is getting, kind of making money on the downside, because as your deltas are getting more negative as you move down as well. If you think about the scenario, I think sorry about the negatives on that last statement, but conceptually, as the stock's moving down, you're making profit, and you'll see some acceleration in that direction too. So if the stock were to move huge against you, like if you're kind of net short a little bit, if the stock was to move massively to the upside, then how in the money would the 310 calls be if there's like a buyout offer at something insane, $500 for Sherwin-Williams? Conceptually, the 310 calls, if the stock is trading at 500, are essentially 100 delta. And the 300 calls would also be 100 delta. They're both basically 100% likely to end up in the money. And so they're going to basically act like stock. Every time the stock goes up and down, it's going to be like you're short 100 deltas per contract for the 310 and long 100, deltas, like long stock for that many, for 100 shares per contract in the 300 calls. So those deltas, even though there'll be a little bit of initial profit and loss in your position, at that point, those things are going to cancel out. Every time stock goes up or down $1, it's not going to matter because you're going to be short and long 100 deltas in those two positions. So these are going to completely balance each other out, but you still are short 232 shares in stock. And so if the thing were to move huge, some ginormous move, then you could still lose, a sizable amount of money just being short, because essentially at that point it's like you're naked short, 232 shares of Sherwin-Williams. In the extremely unlikely scenario that happens. So the moral of the story is that when you're hedging your deltas, you need to update them pretty regularly, because the deltas are changing. The gamma is essentially the acceleration on your deltas. And so as your deltas are changing, you just need to go in and, if you're only holding the position for a day or two, it doesn't matter that much. But if you're going to hold it over a longer period of time, then you'd want to get in there and hedge them pretty regularly. There are some platforms that would, can hedge you delta neutral automatically if you have something fancy. But this used to be really expensive for retail traders, because if your position's only a $5,000 position and you're hedging constantly and spending $20, $30 per trade, I mean, you can really destroy the value in your position. But with stock trades being now near zero, it's actually something that's a much more viable option on a smaller position than it used to be. Yeah, so you can see over a short period of time, even just like in an hour or so, the deltas did change a little bit. It's not a super exact science, or put it this way, that stock alone is not a perfect hedge to options. As Ophir says, you can only really hedge options with options. For the stock movement itself, as implied volatility change, as other things change, then the actual prices of the options change, the deltas change, etc. So, people could decide that they really want to buy this 310, out of the money call, or vice versa, or sell it. So the markets on these things can change independently, and so your position's P&L can change a little bit on its own, just as like essentially, how in demand these options are, what the implied volatility of these options are. But hedging with stock to get delta neutral is pretty solid step towards taking a position and, reducing a lot of the volatility out of it. It lets you have a little bit of confidence as you're going into expiration to say, hey, I'm not super worried about these things getting assigned. My position, I can kind of lock in the profits, and then as you get closer to the end of the day, the next day, you can make a decision about, if you're going to just let these things expire or how you want to handle the position at that point. Okay, so that got into, I know that delta and gamma, this kind of stuff can be a little bit, a lot to wrap your head around at first. I moved through it pretty quickly, so but hopefully it gives you at least a starting place to look at that if that's not something you've looked at before, and maybe a little refresher for those of you that that kind of scalping your deltas and all that kind of stuff more often. But I just want to do that quick little update, and now we can jump into any questions that anyone has.
Okay, Jason. One point I'd make, in the old days on the trading floor, you don't necessarily have to do 100% of your current net delta. You could do, some people used to do 25% at a time or 50% at a time. So I just make that point. There were two quick TOS related questions for you. Are you using TOS desktop or TOS web-based? I don't think I've seen TOS give combined deltas.
The last few screens, at the very beginning was I have the installable like as well. So the very first screens were the desktop version. These are the desktop version. When I just want to do something very quick, or if I'm on a different computer, sometimes I'll use the web version, and that's what this is the web version. Yeah, so it's like I go to trade.thinkorswim.com to get that's where you can find the online version of that. The desktop version is obviously a lot more powerful. This is, gets the job done, has the basics in there.
Okay, the other
Oh, actually,
TOS.
I didn't share there, did I? I stopped sharing. I'll just say real quickly that this version is the desktop. It's more powerful, more full featured. This version is the trade.thinkorswim.com. So I used a little bit of both, partially intentionally as well, just in case someone is more familiar with one than the other, that they'd have something to relate to.
Okay, the other Thinkorswim question is, can Thinkorswim create a table like you were referring to here that calculates your total delta and gamma positions?
Yes, they can do charts. It's not, I don't know about a table. I don't know if they can do it in a table format. I mean, with ThinkScript, you can do a lot. So there's very little you can't do if you want to code something up. But they will have sort of scenario analysis about if stock moves up or stock moves down, what it does to your P&L over time. So you can kind of see the curvature and the shape of your stock in different scenarios. If that's something a lot of people are interested in, then we could look at that on a future one. But yeah, from that you can kind of see the way that your stock position is going to change over time. Basically, you're probably going to see a curve one way or the other. It's going to flatten out. If you have a more complex position, you'll start to see. It's like when you look at a P&L chart, oftentimes they're viewed kind of like at expiration, like what the value of this position is going to be. So it'll look a similar shape to that. It'll just be more curved because depending on if it's a ways out, then there's sort of a probabilities surrounding reaching all those different points. So it'll kind of look like a curved version of a typical P&L chart that you'd see.
Someone is suggesting use the Analyze tab. It'll make it easy. And last Thinkorswim question, is Thinkorswim your options app of choice?
Not particularly, just not for any particular reason. I'm not going to recommend anything particularly to you, but Ophir and I just, we created an options trading platform back in the day that was sort of customized to those founders and to our own interests and needs. And so that's kind of what I'll speak for myself. That's what I personally really started trading options through. It was a company called LiveVol, and then they got bought by SIBO, and then the actually trading app got sold off to various brokerages and that kind of stuff. But I'm a little biased, but it's by far my favorite trading platform, and I think Ophir still feels the same way.
Okay, last question in the Q&A, I think. In your SHW example, the original position would have continued to benefit if the stock price moved from 302 up to 310. Only a price drop would be bad for the position. Could we consider buying a couple of Jan 19 puts instead of shorting the stock?
Yeah, you could definitely hedge your Jan 19 puts. Yeah, absolutely. Absolutely. And in some ways that might behave more similarly. I guess the question is if the markets are wide, they're going to still have the same issue with wide markets. If you have to, if you're buying those on the offer, then you still
Right.
might lose some edge that way. But in terms of a hedge, you can definitely hedge your deltas with, and potentially your vol and some other risks as well.
Right.
Yeah, if you were to buy puts in the Jan 19, then yeah, you're going to also be canceling out because now you're going to be long some of the Vega and so it's definitely in some ways a more complete hedge. But if you're just looking to kind of balance out your position and the nice thing about trading stock is it's basically commission free and you can get in and out very quickly and there's the markets are pretty tight. So
Okay. Does TradeMachine take into account the market stage when it makes recommendations? Like,
do you know what he means by stage there?
I'm guessing he means the overall marketplace. Is it, are we in rally mode? Are we in
Yeah,
coming
gotcha.
off mode, or are we just flopping around, not really doing anything? I think that's what he means.
Gotcha. Yeah. So you can get a little bit of that flavor from the VIX if you want to set as a technical, because the VIX, obviously, when the market's rallying for a long period of time, then you're going to have a low VIX. And if the market's choppy or tanking, you're going to have a high VIX. And so you can get some degree of, kind of purchase or leverage with respect to market conditions that way. For the individual stock, obviously, if you pick the right moving averages, you can kind of cater it to whatever time frame. If you look at some of the videos around, fade the dip or that kind of stuff, they're very, you can get pretty crafty with if you're over the 50 delta and under the 21 EMA, that kind of stuff to pick what the recent activity in the individual stock is. If you want to trade market conditions as a whole, then you can certainly, trade the indices, SPY, that kind of stuff through the tool. But with respect to, hey, I'm looking at buying Apple, is Apple looking at if the SPY has gone up for the last 6 days in a row? Not particularly. Yeah, so you'd have to do something more indirect. The back tests, with aside from the VIX, the back tests are looking at the technicals on that individual stock. I do think that kind of something a little bit more pair trading or allowing people to play off the indices or at relative strengths, that kind of stuff. I would not be at all surprised if that is in our future. It's definitely of interest. So, stay tuned.
Cool. Back to the top of chat. Yes, I did close my windows tonight. Thank you for asking. And when are the trade triggers? When do they start showing? I assume that the person means on the Today tab. And if they start showing between 10:30 and 10:45 Eastern time every business morning.
Yeah,
And
basically, go ahead.
I was just going to say, same thing for any personal alerts that you have. You start receiving them. I start receiving emails just about the same time.
Yeah. What we found is if we started sending alerts in the first hour of the market, it's like directionally what's happening with the day. There's just a lot of change of direction and volatility. So there's a lot of, always with TradeMachine, if we're sending out an alert in the middle of the day, the conditions can change by the end of the day. And so we encourage you to, log in and check to see if the conditions are true or to use the pivot points tab if you like that. We found that issue was exacerbated in the first hour of the day. People would be like, hey, I got this trigger saying that we're crossed above the 200-day moving average, but I just logged in and right now it's $1.50 below the 200-day moving average. Where it got there, it's just not there now. And so we kind of give a little cool off period for the first hour before we start sending alerts, and we start sending triggers to the today tab, just to kind of reduce that noise a little bit.
Okay. Do we need collateral if we sell calls against that existing trade, the existing diagonal? We already have 500 buy/sell calls in this trade. So yes, your collateral, your buying power required will go up if you sell extra calls. If I could interject what I would do if I wanted to stay in that SHW trade, you can always roll the short calls that are about to expire into the same expiration where you have your long calls. So you could do a short, you could buy back your short 310 calls of, I think it was January 19th tomorrow, and sell. So you buy those back and you sell the 310 call in the Jan 26, and then you have a long 300/310 call spread expiring after earnings, but you could keep that for a few days if you think SHW is going to rally. Just make sure you close it before the earnings event. I have back tested that many times, and if the back test was positive, I have done that trade.
Yeah.
Okay, just make sure the earnings event is a 50-50 shot. You don't want to take your long call spread or your long diagonal if for some reason you did the diagonal after the event. You don't want to take your existing position through the earnings event. That's a completely different trade, and it's no better than 50-50. Okay, could there be a future feature on TradeMachine allowing selection of only monthly expiration in Today tab backtests?
Yes. And oftentimes, because the kind of contrapositive of that is that a lot of people, if it's a weekly trade, only want to trade stocks that have weekly options. And so I think those would be a natural synergy together.
Mm-hmm.
So yeah, I think that's certainly, certainly doable. I couldn't give you a timeline for it, but I think that and pair trading are two things that would have definitely considered.
Okay. How do we solve for a problem with TradeMachine? I want to get long a stock. What's the best strategy for that stock? So I think we're going to go look at ProScan for best.
Yeah, other than the fastest way, if you're looking to trade an individual stock. So if you kind of like know the stock you want to trade and are deciding upon a strategy, as opposed to having a strategy and trying to decide which stocks to trade it in. I'll share my screen real quick.
Okay.
There's a lot of the backtest tab with a portfolio backtest. If you click the save backtests and you do something like, pick one of the strategies that are built in, these all have explanations. You can essentially do your own portfolio backtesting very easily. And with the AI triggers, they don't happen nearly as often, but they tend to be strong signals. So on each of these webinars, I want to bring everyone's attention to this. You can load one of our existing strategies or save your own strategies there and backtest an entire portfolio of stocks. And when that completes, you can then set alerts on individual stocks. And so that's how, if you have a strategy and you want to figure out the best stock to use it with, that's the approach. And then right after this completes, because I do like to show that because it's a relatively new feature. Once this backtest completes, we can start to set alerts on the individual stocks that we like here. but I can open up a new tab while that finishes. On the other hand, if there's a certain stock you want to trade and you're wondering the best strategy to do it, then if you go to the Pro Scan tab, if you go by tickers, and you could choose a bunch of different tickers if you want to. Now you can sort by either the total backtest return or average trade return and start to say, okay, so for Amazon, if we're looking at the last year, but you can turn that off. You can say, I want to look only at 2 or 3 years. Now we're seeing that the average trade return for AMD, this one has 5 trades and they're 26% a piece on this fade the dip short put spread. And so you can sort by win rate, this kind of stuff. We can actually even add some additional filters for minimum win rate, minimum average return, minimum total backtest return, and filter. And so you can actually plug in 100 different stocks in here if you want to. You can have your own custom portfolios. Then from that, you can, figure out which of these is of most interest to you. And when you click it, it'll pull up the strategy. This is another 50-20 diagonal call spread. And I'm not going to take the time to go into the specifics of the technicals here, the Bollinger Bands and things, but you can simply add an alert and say best Amazon tech strat. And if you click add the alert, then you'll get an email. And if you add a phone number, then you'll get a text message as well. All right. Hopefully that helped. Oh yeah, I did want to show just the last part here. So this strategy completed. Once it completes, you'll see all of these little text boxes on next to alert. So what I could do is sort by the average trade percent against this basket. I picked one of the backtest results here. If you go to the Learn tab, you can learn all about buy the sell-off, about the thought process behind it, how well it performs historically, etc. But now that I've sorted by average trade return, I could just pick the top several here, or I could say I only want to look at the ones that have had at least 2 trades, or anything else that you want. This is going to be since the end date of November 13th, but you could update it to the last 3 years. But you can cherry pick the ones that you like. You click add alert, and it'll add all of these into alert, and it'll send you a link to your text or to your email with that information. You can add a little customized note there. Before we get to any more questions, the kind of 2 things that we always try to mention during these are, one, from your back test, you can set alerts yourself. So it's kind of like your own scanner. And then another is just, here's community, and we'd love for you to just hop on and, ask questions. Max is in there most of the day to answer questions. We just ask you to agree to our code of conduct. And then if you have both CMO Pro and TradeMachine, you click over to TradeMachine, and then this is a whole dedicated community to people talking about, TradeMachine, ask any questions you want to, or trades you're doing. And you can see this handle, Chat Uncle Pops. That's Max right there. And he's a really great resource on community.
Thank you for the kind words. Appreciate it.
That's true.
Back to the just the last part of the gentleman's question, and I think you may want to go on a back test for this. If he's long stock and he wants to hedge it, he wants to see alternatives to hedging long stock. You could just do a covered call, and without the comma, you can see 5 different deltas of your short call, and pick the best one.
Yeah,
I don't know if you want to
I'm
show
happy
that.
to do a back test. Yeah, I'm on the custom strategies. You can either do cover calls, or you can sorry, it's the middle of loading here.
He can buy a put. He can buy a put spread.
Yeah, or also on these custom strategies, you can enter the number of shares of stock that you want to be short or long, and you can choose whether to roll it or not. when it comes to some hedging strategies, you could set up a different technical conditions. You could look at the overall performance of like a call strategy and an overall performance of like a stock strategy and then combine them. So you could just look at the total dollars spent and then combine the two. If you really wanted to get into some kind of more nuanced, things like that. But yeah, just in general, you can create custom strategies of, as detailed as you want to, with stock using the kind of, shares of stock in any kind of positions you want to. So you can make something more elaborate than just a straight cover call if you want to, you can be short 50 shares of stock or something like that and combine that with any kind of option positions you want.
Okay. So continuing on along with this question, but what is the strategy that is the best choice at the time of the trade?
Yeah, so in terms of trying to figure out the best strategy for a particular stock, one, you can start experimenting on your own 100%, and start working, go down and do technical open and start setting your own technical conditions and see what's worked well in the past. Something I do a lot is I'll start, once I'm zeroing in on a position, yeah, you can test different time frames. You can test if I want to do, 7 days, 14 days, 60 days out in a particular stock, how deeply in the money I want to be. If I don't put a comma, it'll test a range of deltas. The range of deltas is based on this. If it says use custom deltas, then it'll use the deltas here. So this is testing a range of deltas. So that's a little bit of scenario analysis. You can also kind of compare that versus like, okay, what if I just buy calls 30 days out? So, I mean, if you really want to get into like a nuanced thing, you can get as deep into creating your own strategies as you want to. In terms of like what's the best strategy for a particular stock, then I know we kind of already went into it a bit, but in terms of like the 30 or so strategies that we've built, if you went in here, these are the ones that have performed well enough that we include them in the scanner, meaning they have at least a 50% win rate and they're positive in terms of their total backtest return and a few other things. You could set an alert on all of these. If you happen to get 2 alerts in the same day in terms of what's the best thing to trade right now, then you could look at which one has had a better historical performance over the last 2 years, 3 years, 5 years, etc. for that particular stock.
Right. Okay. That's very helpful, Jason. If you want to continue this discussion, I'm in the community most of the day, so come visit me and we can go through some examples. All right, and then there's 2 questions in Q&A. Will we be able to graph skew and kurtosis in Pattern Finder? Do you think that information will be useful?
Yeah, so far you cannot visualize skew and kurtosis yet. And it's not, skew and kurtosis are not really in Pattern Finder at all. In TradeMachine, there's a numeric representation at the top. Yeah, we'll try to figure out a nice clean way to represent that data. It's definitely on our to-do list. Yes, phone number alerts are only currently valid in more or less the USA. I think Canada probably also works. One thing you can do is try to get it like a Google Voice number if you want the text message. Google Voice, sometimes you can get, I'm not sure you can get it anywhere in the world, but oftentimes Google Voice for very low or no cost, you can get a number and it will relay texts to your phone that way. There's probably other services that would do something similar.
Cool.
Great.
All right. Another thank you. I do not see any other questions in chat or Q&A.
Yep. Great. Yeah, I think we were going to try to do this about 45 minutes. I see allowing selection only monthly. Yeah, great. I think yeah, Bill, if you have any further questions, if I did not fully answer your question about the best, strategy for hedging, please just feel free to email support@cmlviz.com. You can send screenshots, back tests, or any other kind of examples, and we'll try to have a look at that, or go to community and ask us there. But great. We hit our 45-minute mark. Thanks everyone for being here, and hope to see you next time around. Thanks everyone.
Thank you. Thanks, everybody. See you in community.
Bye.